During the 19th century, in America, with the American Civil War, the expansion of industry, steel, and metal from Europe, the state was going through a particularly interesting time, fashioned into a mighty civilization from its former days as a remote colonial settlement. Because of industrialization, the means of production shifted from that of agricultural tools to, of course, industrial tools, expensive items of equipment that, due to being privatized, costs quite a lot of money. Workers were unable to afford them, the vast majority, and instead became wage laborers. The need to use such instruments of material creation to produce property and provide services, but they didn't own the instruments themselves. They were in the hands of a few wealthy capitalists, employees of labor who soaked up multiple times more money than any other demographic across the United States. Not from their own work, but from that of their employees. Whenever a property was created, the price at which it was sold was calculated, set by employers to generate themselves the most profit. Most of the money from such a transaction, where a customer buys the property, goes to the capitalist who privately owns the business, despite contributing nothing and living off of the sweat of others, but very little going to actual workers themselves. People who pay for services as well, their money goes to the capitalists who allow workers to access the means of production, which provide services, but give almost nothing back to the workers in exchange, because that's the agreement they've made. However, the worker hasn't actually agreed to allow such money to go to the capitalist. It's just something they have to accept in order to have some money as opposed to literally no money, because there's no other opportunities, methods to produce something of wealth. Since everything that is of productive property that can create things, that is private property. Self-employment across America had dropped from 40% around the end of the 19th century to 20% in the 1940s, and to under 10% in the early 1970s. 3/5 of workers in the North were self-employed in 1850, but unfortunately, this fell to 2/5 by 1860, and 1/3 in 1880. In the United States overall, by 1860, half of the American workplace worked for themselves, were self-managed. But by the 20th century, 2/3 worked for wages for others. It was found that in 1800, 3/4 of workers labored in agriculture and not in the industrial sector. It was the development of the quality of the machines of production that led to an absence of control on the part of those utilizing such machines. No autonomy was given to the workers, and they were, as they are now, at the mercy of their bosses. Despite the fact that workers themselves built the machinery, the tools, the workplaces, the factories, capitalists privatize their efforts away and keep the productive property for themselves. Due to the privatization of such property, only a microscopic portion of working people receive the full value of their work, that being how much people pay for their properties and services in a market economy, considering the vast majority of that currency goes to their bosses. There was pre-industrial capitalism, however, which subsisted throughout the United States. Chattel slavery, which was based almost entirely in agriculture. The chattel slaves were almost entirely of sub-Saharan descent, so this only applied to a fraction of the total population of America, and even they sometimes escaped chattel slavery to become either self-employed or wage laborers. There was a particular American philosopher who witnessed all this change throughout their life, their country, as it morphed into one thing, a disgusting thing. They were used to an agricultural-based economy. If industry must exist, it must be in the hands of the workers themselves, not private owners, they believed. This individual is named Lysander Spooner. He, like many individualist anarchists of his day, including fellow mutualist Benjamin Tucker, who expressed a similar sentiment, was disgusted at the wage labor which had struck the heart of his country's economy. In wanting to do away with such madness, he theorized this concept of mutual credit. In opposition to fiscal interest, he wanted there to be a way, through mutual banking, worker-owned banking institutions known as credit unions, for American workers to obtain the capital they need, the means of production to employ themselves, not having to turn themselves over to a master, a thieving capitalist. Like universal basic income, but more direct and immediate, mutual credit would allow workers to withdraw the quantity of money they desire from a credit union, so that they could set themselves up with their own one-person firm, cooperative, or workplace with the materials they need to sell their products or provide services to others, in exchange for decided amounts of wealth between creator and customer. Lysander Spooner was what you'd call a mutualist. Mutualism is a branch of anarchist thought which began with French theorists such as Pierre-Joseph Proudhon, the first anarchist in name, who, like later followers, Lysander Spooner, Benjamin Tucker, William Batchel de Green, Kevin Carson, etc., formulated a free market anarchism where workers would own and control the means of production, but personal possessions would be privatized, among many other things. In mutualism, there is zero taxes of any kind, nor rent nor interest. Mutualism views wealth-generated through investments and loans to be theft, since all labor, mutualism believes, must derive from labor itself, that being value going to labor. You shouldn't be able to have value, have money, have any kind of income, unless it is produced through labor, devoid of any factors external. Rent is based upon theft, through the legal right a landlord has to steal money from private housing residents, even if they're not providing anything of value themselves, not working in the slightest, and actually setting terrible rules for everyone else to follow on their privately owned space. So, they're a net negative, massive thieves, paternalist, forcing people to abide by such rules they didn't consent to, interest investments and loans, in terms of messing with the flow of money, mutualists perceive as tampering with the free market. There are no restrictions on what can be bought and sold, on trade, on finance. It's the free market after all. There is no price fixing. Prices are determined by either sole actors, such as workers who haven't joined any team, or workers' cooperatives who set prices democratically. Their adherents to the labor theory of value and make constant distinctions between productive and personal variations of political property. There's a lot more to mutualism, but this isn't a video on mutualism. For more on mutualism, I recommend reading Clarence Lee Swallop's book, What is Mutualism?, which provides a full explanation. One of the essential things mutualists advocate is that of mutual credit, and that of mutual banking. So in this video, I'm going to be reading from Lysander Spooner's excellent book that every libertarian socialist should read, Poverty, Its Illegal Causes and Legal Cure, which he elaborated in detail upon how a mutual credit system would work, and how it would so greatly benefit workers. The existing poverty would be rapidly removed, and future poverty almost entirely prevented. A more equal distribution of property that now exists, accomplished, and the aggregate wealth of society greatly increased, if the principles of natural law, and of our national and state constitutions generally, were adhered to by the judiciary in their decisions in regards to contracts. These principles are violated by the judiciary in various ways, for example, in a manner to uphold arbitrary and unconstitutional statutes against freedom in banking, and freedom in the rate of interest, thus denying the natural and constitutional right of the people to make two classes of contracts, which will hereafter be shown to be of vital importance, both for the general increase and to the more equal distribution of wealth, in a manner to extend the obligation of certain contracts beyond their natural and legal limit, and hold men liable to pay debts no longer due, thereby condemning large numbers of men to perpetual poverty and destitution, by making their expired debts a burden upon their future acquisitions, and an obstruction to their obtaining credit for the capital necessary to the successful employment of their industry, in a manner to reduce the obligation of the contracts of corporate bodies below their natural and legal limit, and thus enable the privileged debtors who had the means of payment to withhold payment of debts actually due, and make themselves rich by making others poor, in a manner to deny the legal right of creditors, relatively to each other, in the property of their debtors, enabling and, in some cases, of insolvency, compelling debtors to swindle one portion of their creditors for the benefit of another, making it impossible for capitalists to determine with any reasonable accuracy the value of personal security for loans, rendering it unsafe for them to loan capital at all to mere laborers, and this preventing the natural and more equal distribution of credit among all those poor men, who are in want of capital upon which to bestow their labor, and who, for the want of such capital, are compelled to sell their labor to others for a price much below the amount of its actual products. These erroneous decisions of the judiciary are made, in some of the cases, in obedience to arbitrary and unconstitutional legislation, in others, through ignorance of the natural law applicable to contracts, where no special legislation has been had. It will be the object of the following essay to establish the legality of these various decisions, and to explain their effects in obstructing the increase and more equal distribution of wealth, But before proceeding to any legal discussion, let us state certain economical propositions that are obviously conducive, if not indispensably necessary, to the greatest aggregate increase and most equal distribution of wealth that can be accomplished consistently with the natural right of each man to the control of his own property. Having stated these propositions, we will then see whether these principles of natural and constitutional law, which our judiciary are bound to adhere to, would secure the establishment or realization of the propositions themselves. Every man, as far as, consistently with the principles of natural law, he can accomplish it, should be allowed to have the fruits, and all the fruits, of his own labor. But the principle of allowing each man to have, as far as it is consistent with the principles of natural law that he can have, all the fruits of his own labor, conduce to a much more just and equal distribution of wealth than now exists, is a proposition too self-evident almost to need illustration. It is an obvious principle of natural justice, that each man should have the fruits of his own labor, and all arbitrary enactments by governments interfering with the result, nothing better than robbery. It is also an objective fact that the property produced by society is now distributed in very unequal proportions among those whose labor produced it, and with very little regard to the actual value of each man's labor producing it. And this fact is not the result, except a partial degree, of the superior mental capacities which enable some men, consistently with honesty and fair competition, to compass more of the means of acquiring wealth than others, but it is the result, in a very important measure, of arbitrary and unjust legislative enactments and false judicial decisions, which actually deprive a large portion of mankind of their right to the fair and honest exercise of their natural powers in competition with their fellow men. That such is the truth will be seen hereafter. But the principle of allowing each man to have the fruits of his own labor will also conduce to the aggregate increase of wealth is obvious for the reason that each man being, us he then would be, dependent upon his own labor, instead of the labor of others, for his subsistence and wealth would be under the necessity to labor, and consequentially would labor. The aggregate wealth of society would therefore be increased by just so much as the labor of all the members of society should be more productive than the labor of a part. It would also be increased by the operation of another principle, to wit, when a man knows that he is to have all the fruits of his labor with more zeal, skill, and physical energy, than when he knows, as in the case of laboring for wages, that a portion of the fruits of his labor are going to another. Under the influence, then, of this principle, that each man should have all the fruits of his own labor, the aggregate wealth of society would be increased in two ways, to wit, first, all men would labor, instead of a part only, and secondly, each man would labor with more skill, energy, and effect than hired laborers do now. In order that each man may have the fruits of his own labor, it is important, as a general rule, that each man should be his own employer, or work directly for himself, and not for another for wages, because, in the latter case, a part of the fruits of his labor go to his employer, instead of coming to himself. That each man may be his own employer, it is necessary that he have materials, or capital, upon which to bestow his labor. If a man have not capital of his own, upon which to bestow his labor, it is necessary that he be allowed to obtain it on credit. In order that he may be able to obtain it on credit, it is necessary that he be allowed to contract for such a rate of interest as will induce a man, having surplus capital, to loan it to him, for the capitalist cannot, consistently with natural law, be compelled to loan his capital against his will. All legislative restraints upon the rate of interest are, therefore, nothing less than arbitrary and tyrannical restraints upon a man's natural capacity and natural right to hire capital upon which to bestow his labor. And of consequence, they are nothing less than arbitrary and tyrannical restrictions upon the exercise of his labor to obtain all the fruits that he honestly can obtain from his labor. The rate of interest, which the capitalist will demand, will depend upon a variety of circumstances, and especially upon the risk of loss attendant upon the loan. In other words, upon the character of security offered by the borrower for the payment of the loan. This security and consequent risk will differ in the cases of different individuals. The legislation, therefore, that prescribes a fixed rate of interest beyond which no contracts may go, especially that limit be, as it usually is, the lowest at which capitalists loan money on the most approved security, in effect, derives all those who cannot offer the most approved security of the right to hiring capital at all. The great mass of those who, by reason of not having the most approved security to offer, cannot borrow capital at all at 6%, could yet, without difficulty, borrow enough to employ their own hands upon, say from $200 to $1,000, on the credit of their skill, industry, integrity, and ability, and other value which their labor would add to the capital borrowed, if they were allowed to contract for 7, 8, 9, or 10% interest, enough to pay for the risk of life, health losses by theft, robbery, etc. which risks it is perfectly right for the capitalist should be guarded against by an additional rate of interest. The effect of usury laws, then, is to give a monopoly on the right of borrowing money to those few who can afford the most approved security. A man offering the most approved security can obtain money at 6%, while another, whose security is not so acceptable but who nonetheless could obtain money, is readily at 7, 8, or 9%, as the other does at 6, cannot now obtain it at all, simply because he is forbidden to contract for such a rate of interest as would, in the average of loans, compensate capitalists for the additional risk or inconvenience attendant upon the only kind of security he has to offer. The consequence is that the loanable capital of society is monopolized almost entirely by those few, those very few, who wish to borrow and can offer the most approved security, while the mass of those who have not capital of their own, but who, if left free to make their own contracts, will be able to obtain a portion significant to employ their own hands upon, are now, for the want of capital on which to bestow their labor, compelled to sell their labor to those who have, by means of the usury laws, monopolized the capital. And they are compelled to sell their labor at such a price as will enable the employer to make a large profit upon their labor, or, in other words, enable him to put into his own pocket an important portion of the fruits of his labor. All this is the effect of the usury laws. The same laws enable him to monopolize the loanable capital, enable him also to monopolize the labor of those who cannot borrow capital, on which to bestow their labor. To illustrate the operation of this principle, let us suppose that the capital of $500 is necessary to employ the labor of one man. That, under the usury laws, A, owing to the approved character of the security he has to offer, can borrow, and does borrow, at 6% interest. $500 capital, more than he wants to employ his own hands upon. That B is a poor man who cannot borrow capital at 6%, and therefore, owing to the prohibition of the usury laws, cannot borrow it at all. That he is consequently compelled to sell his labor to A, who has borrowed the necessary capital to employ his own labor. That A buys B's labor for a year, and after paying his wages and the interest on the $500 on which he has employed B to labor, he, A, realizes $100 profit. This probably is not an extravagant supposition, for it is probably that employers who borrow their capital at 6% and manage their business judicially do generally realize at least $100 profit from the labor of each adult male laborer they employ. Now, it is plain that if B had been allowed to borrow, and had borrowed, as he probably could have done, this same $500 capital at 9%, and had then employed his own hands upon it, he could have put it into his own pocket, $85 more the fruits of his labor than he did when laboring for A for wages. For he could have had all the fruits of his labor, that is, the amount of both his wages and the profits made by A, with but this abatement, that he must have paid 3% more interest for his capital than was paid by A. This 3% interest on $500 would be $15, which deducted from the $100 that went into A's pocket as profit, leaves $85 to go into his own pocket, over and above the amount he received as wages when laboring for A. This supposition illustrates fairly the operation of usury laws in depriving the mass of men of the fruits of their labor. These laws give a monopoly of the loanable capital to a few individuals. These individuals, having a monopoly of capital, are able to take advantage of the necessities of all those who have not capital of their own, and are forbidden to borrow any on which to labor. They thus compel them to sell their labor at a price that will give their employer a large slice out of the products of their labor. The laws themselves are the contrivances, not of the retired rich men, who have capital to loan, for they, of course, wish to carry their money to the largest and freest market, but of those free enterprising businessmen, as they are called, who, in and out of legislators, are more influential than either the rich or the poor, who control the legislation of the country, and who, by means of usury laws, can sponge money from those who are richer, and labor from those who are poorer than themselves, and thus make fortunes, and they are almost the only men who do make fortunes. For almost all fortunes are made out of the capital and labor of other men than those who realize them. Indeed, large fortunes could rarely be made at all by one individual, except by his sponging capital and labor from others, and the usury laws are the means by which he does it. The reason given for usury laws is that they protect the poor from the extortions of the rich, but this reason is a false one, for there is no more extortion in loaning capital to the best bidder than in selling a horse or renting a house to the best bidder. The true and fair price of capital, as of everything else, is that price which it will bring in fair and open market. And those who falsely pretend to be interested to prevent the rich extorting money from the poor in the shape of interest on capital, are the very men who want nothing but an opportunity for themselves both to extort capital from the rich and labor from the poor, that they may thus fill their own pockets at the expense of other men's rights. The protection they offer to the poor is the protection of forbidding them to borrow capital on which to employ their labor, and thus compelling them to sell their labor at a price that enables the purchaser to make a large profit upon it. It is the protection which, as in the case already supposed, would really extort from them $85 of their labor, to save them from the pretended extortion of $15 in the shape of interest. Leave the rich and the poor to make their own bargains in regard to the interest of capital, and it is as certain as the laws of nature that capital will find its way into the hands of those who are to perform the labor upon it. In fact, the usury laws impliedly admit that such would be the result. Else, why do they prescribe such rates of interests, as much necessarily confine or loan to a few individuals? Of all the frauds by which labor is cheated out of its earnings by legislation, and of the monopolies established by legislation, probably no one is more purely tyrannical in its character or more destructive of wants of the natural right of individuals to make their own contracts, that of just distribution of wealth, than that monopoly of the right of borrowing money, which forbids the mass of men to obtain capital on which to bestow their labor, and thus compels them to sell their labor at a price far below the amount of its actual products. The law that allows all men, without distinctions, to borrow capital, provided they can borrow it at 6%, is in the equality of its operation, like a law that should allow every man perfect freedom to profess and enjoy his own peculiar religion, provided his peculiar religion was a particular and eminent one that was allowed by the state to be professed and enjoyed by any one. A censure that should bid one man to borrow at any rate of interest, whatever, more capital than he could manage by his own labor alone, would not be tolerated, for the reason that it would lie in infringement of man's natural rights to borrow what they could. Yet it would not be half so unequal, or pernicious, nor so unjust an infringement of individual rights, nor probably so destructive of the equal distribution of wealth, as mind the usury laws, which allow one man to borrow enough to employ 100 laborers upon, while they forbid 1,100 laborers to borrow each enough to employ their own hands upon. What a change would be wrought upon the face of society, if each adult male laborer, when he is now obliged to sell his labor, would receive, during the prime of his life, $85 annually of the fruits of his labor more than he does now, and if all older and younger persons, and females who were now obliged to sell their labor, were also to receive a similar greater proportion of the fruits of their labor. But if the supposition before made be correct, what prevents such a result? If the abolition of the usury laws alone would not accomplish it, the abolition of these and the other tyrannical and unconstitutional restraints upon the freedom of industry and man's right of contracts, hereafter to be pointed out, would, I think, certainly accomplish it, at least in the case of all honest, industrious, and ordinary skillful laborers. The laborer not only wants capital on which to bestow his labor, but he wants to obtain his capital at the lowest rate of interest at which, in the name of things, he can obtain it. That he may obtain it at the lowest possible rate of interest, it is necessary that free banking be allowed. So great are the necessities of the poor for materials upon which to bestow their labor, and for the necessities of life such as food, clothing, and fuel, and are so great the difficulties in the way of getting cash to make their purchases with, that they are compelled to make most of the purchases on credit, to make them of the persons who do not wish to give them credit, and who will not give them credit, except at extravagant prices, and also often to buy commodities not the best adapted to their wants. In making their purchases under these circumstances, they not only suffer serious losses in the kinds of quality of the commodities purchased, but the ones are also obliged to pay 5, 10, 15, or 20% more for them than they would have to pay if they had cash to buy with. Probably also the retailer, for whom many of the purchases are made, has himself bought his goods on credit of the wholesale dealer, and paid 5, 10, or 15% more than he had bought with cash, and this increased price, paid by the tailor, finally falls upon the consumer, in addition to the increased price which the consumer also pays on account of his own amount of cash to buy with. Free banking would obviate almost entirely these enhanced prices of commodities, and these losses from the want of adaptation in the commodities to the wants of the purchasers, because if free banking were allowed, almost everyone who was worthy of credit at all, both retailer and consumer, could obtain it at the banks, and then make his purchases for cash, and having cash to purchase with, he would be under no necessity to buy such commodities as are best adapted to his wants. If every man could obtain the capital necessary to employ his own hands, and the hands of his family, children would be reared at home much more generally than now. It would really be necessary for daughters to go abroad for employment, and never to occupy senile and degraded situations as now. And if daughters only were to be reared uniformly at home, society would be pure compared with what it is now. It would often be necessary for sons to go from home to learn sonic different calling from that followed by their fathers. But they would not be driven from home by poverty. And not being driven from home by poverty, they would not be driven into senile and degraded situations, where their loneliness and misery would urge them into vice. As there would, then, be no such extremes of poverty and wealth as now, a son having his father's house for employment would not leave an abode of want to become a menial in the mansion of the rich. He would merely have one comfortable and virtuous home for another of like character, in a family situated in pecuniary respects much like his own, and in which he would be an equal and respected, perhaps cherished member, instead of a menial and an outcast. In such a situation, his morals would be much more safe than when driven by poverty into a senile and lonely condition, where he would meet no sympathy from the family with which he lived, and find no virtuous companionship to keep him from vice. That genuine equality of conditions, and that pecuniary independence, which should enable parents always to rule their children at home, or which should merely save them from the necessity of placing them aboard, except in situations of families where the want of parental kindness and watchfulness would be, in some good measure, supplied to them, would save almost countless multitudes of the youth of both sexes from the ruin that now undertakes the neglected and outcast children of poverty. When you take a look at wages, let's say, in America, and compare them with the level of productivity industrialization has been able to achieve, you see the pure theft the capitalists have been permitted to exercise. Bourgeois interests safeguarded by the state. Workers make 22% of the wealth that's produced. The rest stolen away by capitalists. And at the time, since the book was written in 1846, there was an estimate of wealth in the United States at $2,825 a year. This is including agricultural, self-employed work, of course, but taking into account inequality, almost entirely the result of capitalism plundering America's economy and things even out. So that was $2,825 in 1850. So 4 years after the book was written, but still very close, and that was in $2011. $85, which workers could have saved if they had the full product of their labor, was $2,483 in 1846. This means workers lose, estimating this with the dates only slightly off, so rough but certainly close, 46.77% of the wealth they produced. Of course, this is just Lysander Spooner's estimate, showing just how much capitalists are stealing from workers. In reality, I believe it to be far higher than the statistic he gave, because he can only look at what he sees around him. I'm not sure exactly where he came to that conclusion at. It's because, let's take, for example, wages in Brazil. The average Brazilian wage laborer, excluding inequality, is making $27,576 a year. If we take into account economic inequality, it's far worse, especially considering how unequal Brazil is in terms of income. However, just to be generous, let's keep this number. Provided a Brazilian works 40 hours a week every week of the year, which is 51 weeks, they should be making $226,746 a year, provided they keep the full product, the full value of their labor, and it's not stolen from them by capitalists. In other words, Brazilian workers are only keeping 12.16% of the value they produce. Capital investments, where the owners of production invest into the machinery, their equipment to make them stronger, raise levels of productivity, none of that goes to workers, to heightening their wages. No, it goes to the capitalists themselves, unsurprisingly. When taking into account inflation, which is caused in the first place by the undemocratic management of prices, through that of bosses since they own the businesses of nations, wages for the working class have actually decreased. Wage growth has gone nowhere because unless the minimum wage is increased, capitalists have no incentive to pay their slaves anything extra. They'll get away with whatever they can as long as the state is willing to protect them, to stop their means of production from being seized by the working class. So, with the work of statism sustaining that of capitalism, the economic laws put in place against everyone's will work to prevent self-employment from occurring, so that capitalists will have a larger slice of the proletariat to squeeze dry. The credit system that was currently implemented caused widespread debt, with extreme interest rates, usury. In an attempt to make it out of poverty, the workers themselves were forced into poverty through usury. Statists make all sorts of excuses for the private property system by saying things like, well, you don't have to work for an employer, even though that means reduction of privatized, making them inaccessible to the vast majority of all of the working populations across the world. So yes, you actually do have to work for others. Wage labor or death. And being a wage labor for a lifetime is essentially the same as death. Also, the state of voluntarily working with someone else is called altruism, not capitalism, since instruments of labor are still commonly available to everyone. In communism, where everything which is produced is distributed to, enjoyed, by those who need it the most, one could say that all labor is done for others, since the fruits of production go to everyone, not just the worker. But that's not working for someone or a bunch of people. In the same way, or any close to the same way, people are have to be forced to, under capitalism. This allows the wealth within communism to be spread as far and wide as possible, while in capitalism it's concentrated into the tiniest percentage of the population. And even these individuals don't benefit from it when you consider our rate of productivity and the fact that after reaching a certain point of wealth, no higher level of comfort can be achieved. The capitalist mode of production, by its inherent nature, is based upon force and authority. Most people in America want to be self-employed. Whether it's conscious or unconscious, they naturally crave socialism. And that's just a specific question, a specific environmental context being asked. The actual percentage is about 100%. If all people could have a cooperative version of their job, they would, undoubtedly. When they think of self-employment, the reason some didn't answer yes is likely due to the perception of what it means to be self-employed, freelance, home-based careers, and so on. But a worker's self-managed variant of any job exists, and exists in a so much more superior form. The freedom and individualism that would arrive with the establishment of socialism, with the fall of capitalist statism, the destruction of all institutions with a monopoly on force, be them private sector or public, would allow all workers to labor for themselves, and not for the sake of the selfish, heartless profits of evil tyrants. Anarchism asserts individuals belong to themselves, and no one else.
Historically, have there been any sustained examples on any substantial scale of societies which approximated to the anarchist ideal?
There are small societies, small in number, that have, I think, done so quite well, and there are a few examples of large-scale libertarian revolutions which were largely anarchist in their structure. As to the first, small societies extending over a long period, I myself think the most dramatic example is perhaps the Israeli kibbutzim, which for a long period, may or may not be true today, really were constructed on anarchist principles, that is, of direct worker control, integration of agriculture, industry, service, personal life on an egalitarian basis with direct and, in fact, quite active participation in self-management, and were, I should think, extraordinarily successful. A good example of a really large-scale anarchist revolution, or largely anarchist revolution, in fact, the best example, to my knowledge, is the Spanish Revolution in 1936. And in fact, you can't tell what would happen. That anarchist revolution was simply destroyed by force, but during the period in which it was alive, I think it was inspiring testimony to the ability of poor working people to organize, manage their affairs extremely successfully without coercion and control.
How far does the success of libertarian socialism or anarchism as a way of life really depend on a fundamental change in the nature of man, both in his motivation, his altruism, and also in his knowledge and sophistication?
I think it not only depends on it, but in fact, the whole purpose of libertarian socialism is that it will contribute to it. It will contribute to a spiritual transformation. Precisely that kind of great transformation in the way humans conceive of themselves and their ability to act, to decide, to create, to produce, to inquire, precisely that spiritual transformation that social thinkers from the left Marxist tradition, from Luxemburg, say, on over through anarcho-syndicalists have always emphasized. So on the one hand, it requires that spiritual transformation. On the other hand, its purpose is to create institutions which will contribute to that transformation.
Lysander Spooner details further his views on mutual credit in another literary text. He states, "The best of all possible banking capital is real estate. It is the best because it is visible, irremovable, and indestructible. It cannot, like coin, be removed, concealed, or carried out of the country, and its aggregate value in all civilized countries is probably 100 times greater than the amount of coin in circulation. It is therefore capable of furnishing 100 times as much money as we can have in coin. The owners of this real estate have the greatest inducements to use it as banking capital, because all the banking profit over and above expenses is a clear profit, insomuch as the use of the real estate as banking capital does not interfere at all with its use for other purposes. Farmers have a double, and much more than a double, inducement to use their lands as banking capital, because they don't only get a direct profit from the loan of their notes, but by loaning them, they furnish the necessary capital for the greatest variety of manufacturing purposes. They thus induce a much larger portion of the people, than otherwise would, to leave agriculture and engage in mechanical employments, and thus become purchasers instead of producers of agricultural commodities. They thus get much higher prices for their agricultural products, and also a much greater variety and amount of manufactured commodities in exchange. The amount of money capable of being furnished by the system is so great that every man, woman, and child who is worthy of credit could get it, and do business for himself or herself, either singly or in partnership, and be under no necessity to act as a servant, or sell his or her labor to others. All the great establishments, of every kind, now in the hands of a few proprietors, but employing a great number of wage laborers, would be broken up, for few or no persons who could hire capital and do business for themselves would consent to labor for wages for another. The credit furnished by this system would always be stable, for the system is probably capable of furnishing at all times all the credit and all the money that can be needed. It would also introduce a substantially universal system of cash payments. Everybody who could get credit at all would be able to get it at bank, in money. With the money, he would buy everything he needed for cash. He would also sell everything for cash. For when everybody buys for cash, everybody sells for cash, since buying for cash and selling for cash are necessarily one and the same thing." Spooner, in pointing to the immorality of the ruling class, addresses their utilization of coercion, force, and authority, made reality through that of statism, to bring the working masses into the privatized fold, pushing them into servitude. If, now, the employers of wage labor in this country, who are also the monopolists of money, and who are ostensibly so distressed lest their own wage labor should suffer from the competition of the pauper labor of other countries, have really any of that humanity of which they make such profession, they before them a much wider field for the display of it than they seem to desire. That is to say, they have it in their own power, not only to elevate immensely the conditions of the laboring classes in this country, but also to set an example that will be very rapidly followed in all other countries, and the result will be the elevation of all the oppressed laborers throughout the world. This they can do by simply abolishing the monopoly of money. The real producers of wealth, with few or no exceptions, will then be able to hire all the capital they need for their industries, and will do business for themselves. They will also be able to hire their capital at very low rates of interest, and will then put into their own pockets all the proceeds of the labor, except what they pay as interest on their capital. And this amount will be too small to obstruct materially their rise to independence and wealth. But will the monopolists of money give up their monopoly? Certainly not voluntarily. They would do it only upon compulsion. They will hold on to it as long as they own and control governments as they do now. And why will they do so? Because to give up their monopoly would be to give up their control of those great armies of servants, the wage laborers, from whom all their wealth is derived, and whom they can now coerce by the alternative of starvation, to labor for them at just such prices as they, the monopolists of money, shall choose to pay. Now, these monopolists of money have no plans whatever for making their capital, as they call it, that is, their money capital, their privileged money capital, profitable to themselves otherwise than by using it to employ other men's labor. And they can keep control of other men's labor only by depriving the laborers themselves of all other means of subsistence. And they can deprive them of all other means of subsistence only by putting it out of their power to hire the money that is necessary to enable them to do business for themselves. And they can put it out of their power to hire money only by forbidding all other men to lend them their credit, in the shape of promissory notes, to be circulated as money. All these things prove that the government does not exist at all for the protection of men's rights, that it absolutely denies to the people any rights, or any liberty whatever, except such as it shall see fit to permit them to have for the time being. It vertically declares that it does not itself exist at all for the good of the people, but that the people exist solely for the use of the government. All these things prove that the government is not one voluntarily established and sustained by the people for the protection of their natural inherent individual rights, that it is merely a government of usurpers, robbers, and tyrants who claim to own the people as their slaves, and claim the right to dispose of them and their property at their, the usurpers, pleasure or discretion. Now, what I really admire about Lysander Spooner, for those who follow me, who've seen the sort of stuff I've posted on earlier accounts, you probably know why, is he's understanding that chattel slavery is a far lesser evil to wage slavery. A controversial statement, yes, and Spooner, if he were alive today, would undoubtedly catch a lot of criticism for holding and expressing such a belief, but nonetheless, he was right. Even though he was an abolitionist, he understood that what industrial capitalism was so evil, so corrupt, depraved, the absolute distillation of defilement and totalitarianism, pure despotism, that chattel slavery in comparison was social democracy on steroids. Lysander remarks, "In process of time, the robber or slave-holding class, who had seized all the lands and held all the means of creating wealth, began to discover that the easiest mode of managing their slaves and making them profitable was not for each slaveholder to hold his specified number of slaves, as he had done before, and as he would hold so many cattle, but to give them so much liberty as would throw upon themselves, the slaves, the responsibility of their own subsistence, and yet compel them to sell their labor to the landholding class, their former owners, for just what the latter might choose to give them. Of course, these liberated slaves, as some have erroneously called them, having no lands or other property and no means of attaining an independent subsistence, had no alternative to save themselves from starvation, but to sell their labor to the landholders in exchange only for the coarsest necessities of life, not always for so much even as that. These liberated slaves, as they were called, were now scarcely less slaves than they were before. Their means of subsistence were perhaps even more precarious than when each had his own owner, who had an interest to preserve his life. They were liable, at the caprice or interest of the landholders, to be thrown out of home employment and the opportunity of even earning a subsistence by their labor. They were, therefore, in large numbers, driven to the necessity of begging, stealing, or starving, and became, of course, dangerous to the property and quiet of their late masters. The consequence was that these late owners found it necessary, for their own safety and the safety of their property, to organize themselves more perfectly as a government, and make laws for keeping these dangerous people in subjection. That is, laws fixing the prices at which they should be compelled to labor, and also prescribing fearful punishments, even death itself, for such thefts and trespasses as they were driven to commit, as their only means of saving themselves from starvation. These laws have continued in force for hundreds and, in some countries, for thousands of years, and are enforced today, in greater or less severity, in nearly all the countries on the globe. The purpose and effect of these laws have been to maintain in the hands of the robber or slave-owning class a monopoly of all lands and, as far as possible, of all other means of creating wealth, and thus to keep the great body of laborers in such a state of poverty and dependence as would compel them to sell their labor to their tyrants for the lowest prices at which life could be sustained. The result of all this is that the little wealth there is in the world is all in the hands of a few, that is, in the hands of the law-making, slave-owning class, who are now as much slaveholders in spirit as they ever were, but to accomplish their purposes by means of the laws they make for keeping the laborers in subjection and dependence, instead of each one's owning his individual slaves as so many chattels. Well, Lysander Spooner was certainly the saint in his words, telling it precisely as it is. See, the capitalists of the day, these despotic rulers, don't even have the decency to provide their workers any degree of dignity, which is in contrast to that of chattel slaves who, at the very least, weren't told, pretended to, that the injustice done to them was in any capacity acceptable, supposed to be liberating or beneficial to them. The owners of chattel slaves were honest, unlike employers of wage labor, and there existed a guaranteed state of free time, wealth, health, longevity, and safe working conditions for the chattel slaves, where there existed no poor slaves or rich slaves, but instead an egalitarian distribution of financial value, which ultimately benefited the most amount of people. The wage slaves, however, are completely disposable. Because they're not bought and sold, they can be shred away or killed on sight. Employers don't care. Bothering to fix the abysmal, degrading working conditions the proletariat have to endure would cost money. And the capitalists, they want to steal money, not give money. The variant of capitalism we have now, Lysander Spooner acknowledged, was far more insulting, disgusting, and repulsive than the comfortable slavery of America's past. Of course, it doesn't mean that chattel slavery was good by any means. It's still a kind of capitalism. Instead, we should, as Lysander Spooner has, emphasized the importance of workers' self-management. Man, what can I say about Lysander Spooner? Now, he was a real gem, an anarchist who never hesitated to say what he needed to, a socialist who opposed despotism and tyranny, in whichever form it appeared, able to understand the clear-cut connection between privatized oppression and the state's upholding of such violence. Truly one of the finest economists and philosophers of the 19th century. To learn more about Lysander Spooner, see the full books. Poverty, Its Illegal Causes and Legal Cure, by Lysander himself. The Lysander Spooner Reader, by George H. Smith. Lysander Spooner, American Anarchist, by Steve J. Shawn. And Men Against the State, The Expositors of Individualist Anarchism, 1827 to 1908, by James J. Monin, which documents Spooner's thought, among other individualist anarchists.